Hey, good morning, everybody. Welcome to June 14th, Friday it is. Great day, Friday, last day of the week. But I want to remind you, this is halfway through the month of June, which is really hard to believe that we're already there. I did want to show you a few things before we get on with Dave today. I want to look at the current numbers. The Dow is finally positive for the last 12 months, positive for the last 30 days, positive for the week. Same for NASDAQ, same for the S&P 500. So finally, we're seeing some traction. But today at the start, it looks like we might be heading a little bit to the downside. So kind of keep that in mind as we get ready to start this morning. And we look forward to today's show. Hope you guys will enjoy it. Again, I want to remind you about our free report on understanding market corrections because we've seen a lot of ups and downs here lately. Text the word market to 863-285-3815 to get your free copy. Hey, Dave will be with us in just a moment.
105.7 Light FM. I'm so glad you're here each day. It's 8:41 now, 19 before 9. Time to check in on money and find out how Wall Street's doing this morning. It was an up day yesterday. It wasn't half bad. Let's see if we can keep it going. Phillip Statler is in his office at Statler Financial Services in downtown Sebring. We start out the day with retail sales, Phillip, and we kind of had a conversation in the beginning. It was interesting. I was kind of taken aback by the fact that some of my economists that I was tracking were saying that they expected a 0.7% increase in May, only got 0.5, but once you peeled the autos out of it, it was a pleasant surprise, wasn't it?
Yeah, it seems to be, Dave. We looked at it and it was a slight miss on overall, but peel out auto, and it was actually about 0.1% ahead of what was forecasted. So
And
I guess if you weigh that out, that's a good thing.
yeah, it surprised me that we were expecting 0.7% after the crummy report we had in April. But then again, the April number was revised up by the government from the original report losing 0.2% to gaining 0.3. So that's a full half-point change as well. I guess, well, one of my columnists said the death of the American consumer has been greatly exaggerated. Fair statement, right?
At least at this point, yes, sir. I would say
I
so.
found it was heartening anyway. It's good to see good news on the economy. The thing that did strike me is I had a chance to page through, excuse me, the release. The leading category in the bunch was electronics, and we know where electronics tend to be made that we sell in this country. I can't help but wonder whether or not some of the increase in May was driven by a bunch of consumers saying, "Oh, spit, my big screen TV is going to be going up in price. I better buy it fast," because electronic sales were up by 1.1% last month. So we might just have kind of an artificial bump here.
I think that could be true. Because let's face it, if it was on your radar screen to buy one in the next 6 months to a year, and you think, hey, I know tariffs are kicking in, then I might as well buy it now and save that, 25% that the tariff's going to be.
Oh, yeah, and every reporter with more than 1 month in the business has been saying, yeah, the American consumer is going to bear 100% of this tariff impact, and I've still been calling bull crud on that for quite some time, expecting the Chinese to say they don't want to lose ground to Samsung, so they'll be eating a portion of it, but there's no doubt some of the increase is going to be borne by the consumer.
Oh, absolutely. I mean, that's just a kind of a fact of life that when tariffs kick in, it's going to raise the price of goods and services, and the consumer's going to feel a pinch.
Oh, without a doubt. Another fly in the ointment was you came up with a report earlier this morning from Morgan Stanley, one of the big brokerage houses, with a read on the economy. I think it would be fair to say it ain't good news if you follow Morgan Stanley closely.
Well, that's true. Their economic folks in their economics department came out and basically said they have this system they use to track the economy, and it fell by 32 points in June, and down to 13. And so that's the largest 1 month decline on record. And it comes back to the last time we were down to 13 was back in December of 2008. and we know what
Yeah.
things look like in 2008. So their economists are not painting a very pretty picture right now.
You know, those indexes, you never know what goes into coming up with the index. You look at the size of the change and respond to that accordingly. But the only possible reaction to going 32 points down in 1 month is either statistical error or, oh my God, right?
Well, yeah, and I think they said there's like 9 or 10 different sector things they look at, and only one of those was actually up.
Not what you want to hear by any measure, especially given the fact that I'm like I said, I'm kind of calling bull crud on the surprise increase on retail sales, only on the grounds that I do believe it's push demand. Uh, it's going to be an interesting time to watch down the line. I'm noticing that some of the smart money this morning is starting to fly back to safety after bond prices started recovering. Some of the short-term bonds, the 3 and the 5 year bonds, yield is down by like 5 basis points just overnight. And that tends to indicate that some of the smart money on Wall Street is saying, let's put it somewhere where it goes nowhere for a little while as well.
Yeah, I think so. I mean, I'm looking at an update on at Market Watch, and they, man, it's pretty interesting that the 10 year is down to almost 2.09%, and it had been as low as 2.07.
Crud. Yeah, I was
Yeah.
looking at like a 5 basis point drop. It got even lower than that before I looked at it. 5 years down to 1.83. And again, that's 5 basis points lower than it was last night, which gives you a pretty good idea that somebody on Wall Street is buying an awful lot of bonds because that's what drives the yield down.
Yeah, it is. And so, that's one of those things. But I'm looking here, and you look at the United States T-bill rates and notes, and we're really doing well. I mean, I look at Spain's 2 year government bond; it's yielding a minus 0.3%. You look at the 2 year Japanese bond; it's yielding a minus 0.2%. So,
Ooh.
yeah, it's a lot of the other countries are in negative territory when it comes to yield.
Yeah, I was going to say, we aren't alone in this by any measure. It's a change that kind of is the thing that I always use as an indicator, the sentiment of the market. But yeah, it needs to be said by and large that U.S. Treasury bonds are maintaining still a yield that, while it's not high, is at the very least better than the bulk of the rest of the world, unless you go to the places that are basically on marginal credit cards like Greece and Italy.
Well, exactly, and we know what that's like, right? There's just we know that that's just not going to be good no matter what.
Oh yeah, Greece and Italy are buying on Capital One visas right now because that's about the only credit they can get. It's kind of in that range. News as far as issues are concerned, the big excitement on Wall Street today is Chewy.com is doing an IPO. I've been buying cat food there since my chain stores in town stopped stocking the only stuff that Meatloaf, the Wonder Cat, would eat. They're a Florida company and they're going public today. It's some excitement. They're talking about $1 billion worth of stock sales.
Yeah, almost. They're actually coming out at the high end of their offering price at $22 a share is what they're expected to actually it's above the expected range. And they also sold more stock than originally planned. And so they're going to receive almost $1 billion, like $900 million on the stock sale. And for those who don't know, I mean, there's Chewy.com, and I didn't realize this, but they're also the parent company of PetSmart.
I didn't know that.
Yeah. So that's that IPO is going to hit the market today, and then we had on the earnings front we had Broadcom, which is the chip maker. Chip makers are under a lot of pressure right now, just across the board.
Yeah, they
They
make the big routers that control a lot of the network functions and they bend the bunch. So they're kind of integral to our life.
Yeah, they are, and they beat on earnings per share by about 5 cents a share, which wasn't a big deal. They're pretty high earnings per share at like $5.21 a share, but they missed on revenue, and then they came out with the thing that just always kills them. Hey, we're revising our revenue forecast for 2019 by 8%. So we expect 8% less revenue to come in 2019. They're trading down about 9% this morning.
Woo, that's smart.
Yeah.
Another indication of good news. or bad news?
Yeah, I don't have any. The only other thing I have that I found interesting is, MGA Entertainment has been trying to buy Mattel.
Oh, yeah.
They've made a couple offers, and so the CEO came out and said that Mattel is not worth more than $6 a share right now, and we're not going to pay any more than that for it. And he predicted that if they didn't take their deal or do something, that they would be in bankruptcy protection within a year if they keep doing what they're doing. Now, they're basically $11.65 stock right now. So he's saying it's worth almost half of what their current stock price is. And obviously Mattel's fighting back, saying, we're worth a lot more than that.
Yeah, I'm going to bet that fellow is less than popular in the Mattel executive suites right now.
I think so. And so we'll see how that plays out the rest of this year.
And all it takes to make a toy company worth mega bucks is one good movie tie-in. Disney puts out a good one and Mattel gets the contract and they got it. But if they don't, the other guy might be right?
Yeah, exactly. Hey, the other thing I just saw was Blue Apron. They deliver stuff to your house, meals and stuff. They're doing a reverse stock split, 1 for 15. So they're going to trade one share for 15 shares and boost their stock price up a little bit.
Wow. How low did they go that requires a 1 to 15 reverse?
Let's see. Let's look at that real quick. They're at 60 cents a share right now.
That explains why they do 1 for 15, wouldn't it?
Yeah, exactly. Yep.
Not a brokerage house in the world that likes selling 60-cent a share stocks, right?
No, exactly. Yep. So they're trying to get it back up.
Setting up the table for this morning, it was a green day on Wall Street yesterday, actually credibly green. The Dow was up 101 points, NASDAQ up by 44.5, and the S&P was up by almost 12. That gets us into the range of 1/3 to 0.5% in all three of the major indexes. Green ink is always nice. I'm kind of guessing with the upset over the Persian Gulf oil attacks and all the rest of the crud in the world, add to that the bond buying spree. We're not going to stay in green ink this morning, are we, Phillip?
Well, we're not in too bad a shape, Dave. Really, there's a tinge of pink there, especially in the Dow. The Dow's down to a little over 0.1%, $33. The S&P 500 is down about 0.2%, down $6.40. And the NASDAQ is down the most of all, which is because of chip makers mostly. It's down about 0.7% or $50. Now we've got gold and silver. Silver made a big jump overnight, and they are up 1%, and they have finally crossed back over that $15 an ounce to $15.04. And we've got gold prices, I think, at the highest they've been in a couple years now. That $1,355 an ounce, up about 0.8% before we get started. Crude oil down marginally, actually just went even, $52.28 a barrel, and Trump says interest rates are too high.
Boy, tell me something I didn't expect.
Exactly.
I think Trump will be saying that if we go to negative interest rates, just because I'm getting to the point where I'm figuring him out. World markets overnight, Asian rim markets mostly off. Japan was up on the basis of bad news for China is good news for Japan generally. European markets are generally off this morning, midway through their trading day as well. Phillip, stability and growth in a retirement fund is awful darn important. The smart money is doing weird things. About time somebody could explain it to the average investor. How do I get an appointment with you?
Devin, give us a call at 382-0037 to schedule their free, no obligation X-ray review of their current portfolio to make sure they don't have too much risk exposure. We also have our free report on understanding market corrections, and that we've got a separate number set up to text. You just have to text the word market to 863-285-3815. You can always go to Facebook and like the page Statler Financial Services, where you can see a repeat of this, or if you miss it one day, catch up with us there, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here on Monday morning with a fresh look ahead as well, same time here on Light. Phillip, thank you so very much. I wish you a marvelous weekend ahead.
All right, buddy. You have a great weekend. I'll talk to you on Monday.
Thank you so much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey guys, I want to thank you again for joining us today. I hope you had a great week and have a great weekend, and I look forward to speaking to you again on Monday. Take care.